GRRR is trending after reporting record Q4 and full year 2025 revenue with significant profitability improvements, sparking the debate over its perceived undervaluation and multi-billion dollar AI infrastructure pipeline against skepticism regarding the management's past execution and the stock's price action. Despite robust financials and a positive outlook, many traders are questioning why the share price remains suppressed, citing a disconnect between fundamentals and current valuation. The company announced record full year 2025 revenue of $101.4 million, dollars, a 35.7% increase, alongside a significant 79.6% improvement in IFRS operating loss and strong adjusted EBITDA. The company highlights a growing pipeline exceeding $7 billion in AI infrastructure projects, including new data center initiatives in the Middle East and Asia Pacific. Speculation is rife that short sellers are increasingly vulnerable to a squeeze given the company's strong earnings and the perception of a tightly held float. Traders are looking ahead to this year, 2026, anticipating key catalysts such as achieving cash flow positive status, significant contract conversions, and upward revisions in analyst price targets. Okay, so the stock is correcting within a longer term bearish trend. Its 200-day moving average, which underscores its underlying trend, is sloping bearishly down. Okay, so it is correcting because the moving averages are arranged in such an order, is in such a manner that the fastest are all leading the trend down. You can see here the 10-day moving average is leading the 21-day, which is not so clear there, and then you have the 40-day, and then you have the 200-day. So it is correcting within a longer term bearish trend, even though that's the overall trend. But the stock has actually been showing some strength within this bearish trend. Okay, since Tuesday, the 24th of February, it has just been printing higher prices. So this is now, it was as of yesterday, the 2nd of March, it was five straight session of gains. So it is showing a lot of strength. Yeah, it is showing a decent amount, a decent amount of strength within a longer term bearish trend. The extrapolation is saying that the uptrend is expected to remain in place up till the 27th of March. At various times, it might, contract, which is natural. The 40-day moving average is expected to serve as a robust resistance here. You can see that between now and all the way towards the 23rd of March, it's not expected that it's going to go beyond it. So there's a tight ceiling ahead, formed by the possibly by the 40-day moving average. In the midst of all of that, it has a range of projections. Beginning from the list, we have 8.23, 9.37, 11.22, 15.70, 17.68, 18.91. Coming down to its 10-day moving average. The 10-day moving average is expected to remain flat, but also in unison with the extrapolation we have up here. But the overall trend is not so, the trajectory, the angle of attack is not a steep one. But in the midst of all of that, it's still in unison with this extrapolation we have here of high prices remaining in place at least up to the 13th of March. However, that moving average, the 10-day moving average, is currently losing roughly 6 cents every day, but it is improving. It is improving. Before now, it was actually losing $1.13 every day, so it is improving. Buying pressure is also improving. Is that the case? Buying pressure is buying pressure is improving, yes, but the pace is not so fantastic. Yeah, okay, let's have a look. We just want to confirm that we want to see how the moving averages are aligning. That may help us understand what's going on. There's a chance they may they may align very well. Let's have a look at the 21-day moving average. The 21-day moving average equally aligning with the 10-day moving average, and that moving average is losing 12 cents, so $1.20 every day. But it was worse than that before. No, as a matter of fact, it was actually better before. Okay, so for now, at least they are the two moving averages. They are the fastest. They are in unison. They are pointing in the same direction, pretty much saying the same thing might happen. Momentum might pick up going all the way towards the 13th of March and even towards the end of the month. Okay, but we have the 40 and the 200-day moving average to see how they align. Okay, so they are pretty much flat. But indeed, the other ones are equally flattish as well. The 10 and 21-day moving averages are equally flattish. Even though they are pointing to the upside, they are also pretty much flattish. So we can say yes, yeah, there's a chance that we may well see what the extrapolation was saying, that strength may remain in place, but with not with a lot of the angle of attack is not expected to be a very steep one. Yeah. Okay, let's see. We can also have a look at the weekly chart if it's possible. Let's see to see if there's anything there on the weekly chart. There are no extrapolations. It doesn't have enough data. Okay, so it has a pivotal projection here of let's see now. The price is two. It is around 2.56. So it was initiated on the 3rd of November. It hasn't tested it, so there's a chance that it's something like that may happen. There's a chance that is something that may happen. So there is a risk. Yes, there's a risk here that a plunge might happen. So let's see. Fingers crossed. It doesn't mean that it will happen, but it's just a risk that it has that potential to plunge. It has that potential to plunge. Okay, so that's what's going on right now. The stock is trending. Um, Posted positive, encouraging earnings outcomes. Yeah, encouraging earnings outcomes. Reaching $100 million annual revenue marks retail. Yeah, I mean, reaching $100 million annual revenue mark. Retail says stock very cheap. Yeah. The first 2 months of 2026, it had collected over $22 million from its largest customers as payment for solutions delivered and invoiced in 2025. Also said its pipeline at present was more than $7 billion. Okay, we've seen that already. Yeah. 2025 results are built on that delivered work, disciplined cost control, and improved quality of earnings. We're not managing for optics, instead, we are managing for execution. Yeah. More than $7 billion expanded due to advanced stage AI and GPU infrastructure opportunities in Saudi Arabia, Thailand, Indonesia, India, and Malaysia. Okay, they're expanding their valuation work in India and progressing their strategy in the Middle East, which includes Saudi Arabia, where an MOU has been signed, and they are actively exploring data center development opportunities. They're also exploring opportunities to buy and build their own data center assets. Ownership changes the model, more control over delivery, strong long-term position, and the potential to build a recurring infrastructure-led revenue streams rather than relying on project cycles. According to, yeah, that's a positive. That's a positive. That's it. I think I agree with that. I agree with that. Yeah, rather than relying on only project cycles. Yes, I agree with that. Yes, diversifying the revenue base, revenue source. Yeah, so that's what's going on with GRRR, and thank you very much for watching this video.